Hello and welcome to the Cryptocurrency News Channel. Today we're going to talk about why Bitcoin and DeFi is taking over traditional banking. Well, not taking over, but will actually take a big chunk of that market. It will split into two markets. And there's three reasons I want to actually talk about. First of all, it's the high interest rates, and the pandemic is actually helping this issue. Yes, the pandemic affects all asset classes. And it actually is making prices drop for asset classes across the board because of delays in production and things like that. But it also has the effect of actually bringing the economy down, and the president is desperate to get the economy back up, so he's going to cut interest rates. Now, how interest rates actually affect the economy is like if the lower the interest rate is, the more incentive banks actually have to loan money out. Also, the more willing people are to actually take those loans because they don't have the interest rate. Basically, if the interest rate is zero or negative, then the banks are not actually getting any money by keeping their money at the Federal Reserve. Or if negative interest rates, they actually have to pay the Fed money to actually keep their money there. So they have an incentive to loan the money out. And of course, that means the interest rate on a loan is much lower, which means you can basically get almost free money to actually expand your business with. Therefore, small businesses and large businesses will actually take more loans, and that gets the economy going. So that's kind of the logic behind that. But low interest rates also mean people can't really save and make interest, and inflation will outpace you. So what do? They don't just stand there and let their assets depreciate. What they do is they actually try to find other ways where they can actually earn safe money. And DeFi and Bitcoin and cryptocurrency, especially with large companies like Coinbase and Binance that are somewhat trusted in the industry, even by outsiders, they're going to turn to them for an interest. Like you can actually stake USDC at some of these places, and that is a stable coin. It's not going anywhere. It's backed by Circle, and it's backed by Goldman Sachs, so they know it's pretty good. So if nothing else, like these stable coins that are built on Ethereum, Bitcoin itself, I think it's going to gain some trust because it's been around for so long. So staking stuff like that, that's going to like eat a part of the zero interest market, because as long as you have zero or negative interest, people are not going to want to deposit their money in a bank, obviously, because depositing their money in a bank gets them nothing, might even lose them money. And zero interest like interest, and also like zero yield bonds or negative yield bonds, no one's going to want those. So that's going to just drive people towards the crypto market. So that's reason number one, the low interest rates and the pandemic. The second reason is that younger people actually have a lack of trust in banks, and that's really the bank's own fault of all the scandals and all the stuff they try to pull on younger people, the massive compensation they pay executives, and they don't really treat their customers nearly as well as they used to. They're basically trying to funnel all their money into their top execs. And, even with like loaning packages, refinance rates and stuff like that, people can see all this stuff happening. People see all the scandals that like the big banks actually have and what they're actually trying to do, and the control that they try to exert over the economy. And they have less trust in them. So they want to put their assets into something else that can't be controlled or printed as easily. A lot of people also have qualms over the US Treasury printing so much money, and they want a currency where you just can't print to infinity, and that's where Bitcoin comes in and other cryptocurrencies. So they've actually done a survey, and people who are 25 and under actually trust cryptocurrencies more than the big banking institutions. Now, I don't know if that's correct, because especially in DeFi, there's been a whole lot of scandals and there's been a whole lot of security breaches. So right now, I don't trust DeFi more than the big banking industries because, I store my money with BMO Harris. I've never actually had a problem with them. Other people might have, but I really haven't. And I've had problems with exchanges, and I've heard of many, many problems with DeFi. I haven't really dabbled in DeFi myself. I don't invest in DeFi, nor do I actually stake DeFi, but many people have had problems with that because of like random security breaches, just really bad code, or other bad practices. So I'm not ready to delve into the DeFi market yet with my money. But people under 25, they actually believe in cryptocurrency on a survey more than they actually believe in regular banking services or big banks. So that's another thing. Like you're losing trust. The Treasury's losing trust, the Fed's losing trust, and the big banks are losing trust, especially the younger customers. When those just younger customers grow, they're going to become the people with the money. And because of that, more money will be flowing from traditional to crypto assets. Now, as those people grow up, their minds might actually change. But as of right now, it does not look good on a trajectory for big banks at this point. The other thing is like The third thing is crypto firms are actually becoming banks themselves. If you look at Coinbase, Binance, they offer a variety of services, investing, leveraging, all this stuff. Like some places like E-Trade, not E-Trade, eToro, and even like Backed and all those things, institutional investors, they're kind of muddling the ground between exchanges and banks. And I think many of them are going to act as both. And if that actually happens, a lot of those customers will probably eventually move to places like Coinbase, like Binance, away from the big banking institutions. And that's the third reason why crypto will actually eat into the banking sphere. Now, I think in the next 10, 20 years, it's going to take a decent chunk. I think it'll take maybe like 10%. And that's going to be really, really big in terms of asset flow. And that's why Bitcoin and cryptocurrencies will actually be much higher. Bitcoin will be the first one. Well, Bitcoin and Ethereum, because all the DeFi stuff is based on Ethereum. Bitcoin and Ethereum will probably be the ones that actually rise first. And then everything else will follow as people get more used to crypto assets. But for those three reasons, the low interest rates, the lack of trust in banks, and crypto firms becoming banks themselves, that's why the Bitcoin and crypto industry will actually eat a chunk into the bank's market share. All right, that is the news for today. Let me know what you think. Like, subscribe, and hit that bell notifications button. Thank you, and have a nice day.